Hello and welcome to the session in which we would look at a couple of exercises that deals with compensated absences, how to account for compensated absences using modified accrual or full accrual accounting. These exercises would reinforce the concept of what is expenditure, how to account for expenditure under the modified accrual. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Hello, my name is Farhat. You are here because you are either an accounting student, a finance student, or someone who's studying for their CMA or CPA exam. Great, you are looking for some additional help and we can help you. I strongly encourage you to visit my website, farhatlectures.com. I offer additional lectures, resources, including PowerPoint slides, multiple choice questions, in some circumstances, exercises, and true-false questions. Our material is aligned with your CPA review courses, with your CMA review courses, with your college courses. I offer a risk-free trial that you can try to find out whether my website can help you or not. If you find it helpful, you subscribe, you keep your subscription. If not, you cancel and your risk is free. If you like this recording, if you like my lectures, you would like what's on the website, give me a chance to help you with your college courses as well as professional certification. I hope to see you on the website.
In 20X8, employees of Willow Creek County earned $5 million in vacation pay. Okay, great. Of this amount, 4.2 was paid during the year, which is X8. 0.8 was carried forward to future years. Also, 0.7 million was paid for vacation time earned in prior years. So simply put, what do we have to do in year X8? Well, in year X8, we paid 4.2 million. Pretty straightforward. Debit expenditure, credit cash for 4.2. Also in that year, we paid an additional 0.7 million that were earned from prior years. We paid for them, their expenditure now. Debit vacation expenditure, credit cash. Now, can I, combine those? 4.9, sure, 4.9, but I did it separately so you can see that it doesn't really matter what year are coming from. As long as you pay them in X8, they are expenditure in X8. Now, what do we have to do really? Now, what we have to do is 0.8, we're going to have to carry to future years. So this is going to be added to the schedule, but remember from the schedule we subtracted 0.7. So overall, we're going to have a net increase to our long-term obligation because we added 0.8, we took out 0.7 from prior year. The net increase to long-term debt is 0.1. Now, how we would have recorded this on the government-based financial statement or accrual, we will debit vacation expense, the full 8 million. So as far as we're concerned, for accrual purposes, the full vacation expense for 5 million, cash 4.2 million, and vacation payable 0.8. Now also, you might be saying, how about the 0.7? The 0.7 will be debit a liability, debit vacation payable, credit cash for the 0.7. But I'm focusing on the expense. But if you're wondering the 0.7, I will debit. I should have put it on the slide. Debit vacation payable 0.7, credit cash 0.7. To remove this, basically to remove this liability that was sitting on my financial statement for cash base for governmental wide financial statement, so I would remove it. But this is how I would account for the 5 million. I will debit the whole 5 million, credit cash, and this one will be paid later, and when I pay it, I will debit vacation payable, credit cash. So I accrued some payable in the past, and now I am paying it off. What should you do? Go to Farhat Lectures, look at additional resources that will help you, whether you are taking a governmental accounting course or studying for the CPA exam. Invest in yourself and good luck.